We have Rahul Malani, who's a research analyst at Mirae Asset Sharekhan, joining us right now. Very good morning to you, Rahul. And yes, a lot of case being building on the fact that the banks will make a comeback. They are in a very steady position. But you know, when you talk about banks, you have two ends of the banks. One is private sector bank, one is PSU banks. And both of these sectors, both of these subsectors did report good set of earnings in the quarter gone by. So which one should one bet on?
So, firstly, good morning. So, overall, I would say that quarter three was a bit a good challenging quarter, not a good quarter for the rural banking sector. If you look at it in terms of high credit cost, moderation in the loan growth, as well as lower deposit growth. So, overall, going forward, we believe that outlook on liquidity is improving. So overall, deposit growth should gradually pick up, and loan growth should pick up from H2 of FY26, led by stress setting in the unsecured loan. RBI is comfortable with the 10% loan growth in the unsecured region, while private capex is expected to gradually pick up. So overall, we believe that if you look at the 10 to 11% loan growth, we believe that has is bottoming out, and we should see at least in the second half of FY26 loan growth gradually improving, and outlook for all the PSU as well as SS private banks should improve gradually.
All right. Hi, Rahul. Good morning. This is Shrishti also joining in. But all this while, Rahul, we have been seeing banks talking about the liquidity crunch in the system, and RBI rightly gone ahead and tried to improve the situation. Help us understand that since it's been almost a month now, how successful they have been in terms of improving the liquidity situation, and going ahead, should we not be expecting banks talking about it anymore?
So basically, you rightly pointed out that RBI has been doing firefighting to use massive liquidity. Plus, RBI additionally has deferred the NCR norms beyond FY26, which is an addition to the bank. But at the same time, we need to acknowledge that some of the mid and small banks have been facing asset quality changes. In the light of asset quality changes, it is difficult to grow because the outlook is currently uncertain. So that is why I am saying that H2 we should see by H1 or at the end of H1 we should see delinquencies settling in the unsecured loan segment, and broadly from there on banks would gradually pick up the loan growth led by it will be a broad base this time, retail plus corporate plus MSME loan from H2 of FY26 onwards.
All right, but Rahul, also give us a sense that how are you looking at the outlook for the loan as well as the deposit growth, because the last calendar year, though the first half was quite strong in terms of the incremental growth, it was in the second half that we have seen these numbers slipping a little below from in comparison to H1. But what's the outlook? How can we see the situation improving a little in the first half of this calendar year?
As far as deposit growth is concerned, if we look at the cost of deposits also, it will continue to deposit in near term. We continue to be a challenge at least in the next 3 months, and we see that it should gradually improve with the system liquidity increasing in the system, as well as the other risky assets have been correcting much. So we believe that at least deposit growth should pick up in the near term. There might be people will be locking in the higher term deposit retail term deposit rates, because a rate cut cycle has started. So we should see gradually some impact on the deposit, positive impact on the deposit growth from starting the quarter one of FY26.
Right. Rahul, I also wanted to get your take coming especially on the banks that have exposure to the MFI space. What's your take on that? Because given the fact that the MFI stress has not gone away, the asset quality also, when you talk about these MFI players, also is having an issue. What's your take on that? Because we were expecting some sort of a recovery to come in for these players which have exposure to MFIs, but that hasn't been as rapid or as swift as one was expecting.
Yeah, challenges at least at least what we believe as far as commentary is concerned from all the banks and PFCs in the market leaders are concerned. challenges will continue to persist at least for the next 2 to 3 quarters in the MFI. Specifically, taking on to the MFI segment with the new entering guardrails as well as the specific geographic issues will continue to hinder upon the higher delinquencies and the higher credit costs. So we will be in a wait and watch mode for the MFI as far as current near term is concerned.
Rahul, though we have talked about the operational metrics for the banking space, but everybody is just liking banks and also highlighting that it's the valuation that is giving comfort in such kind of market volatility. What's your take, Rahul, on that? And as along with that, if you would like to share some of your top recommendations right now?
So my take here is that asset quality pain is not broad-based, but it is limited to the mid and small banks. Uh, Large banks in terms of HDFC Bank and ICICI Bank, Kotak Bank continues to report uh, in continue to go lower than expected on the credit cost front. Asset quality outlook is decent. Loan growth, except you kept aside HDFC Bank for the sake of the merger, ICICI Bank and Kotak Bank is doing fine. So our view is that we will continue to prefer large banks in the near term because their relative outlook is better on terms of low operating equity as well as on the asset quality front. So we are at the same time we will see the valuations also. Valuations are very reasonable versus the sustainable ROE trajectory. So and at the same time we will have a wait and watch outlook on the mid tier and the small bank space where the growth and asset quality outlook is still not uncertain. So in terms of large banks, we are continuing to bet on ICICI Bank, HDFC Bank, and DHS Bank space. We like SBI and BUB. While in mid-tier, selectively, we like Federal Bank, the current point of view.
All right, then we leave it there. Thank you so much, Rahul, for joining us on the show, talking about your top picks, especially in the banking space, being ICICI Bank, Kotak, as well as SBI is what you like. Thank you so much for being part of the show and also talking about what are the factors or the triggers that one needs to watch out for when they talk about banks.